Welcome to our daily Forex market analysis in preparation for trading on June 30th, 2017. Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions if you have questions about your individual investment needs, I recommend you talk to your investment advisor. All right. We are heading into a long weekend here, so pardon me. All right, today we had, I just kind of followed through from a previous week here. We have had a lot of bullish moves, and the bullishness is still intact in the markets. In terms of the news here, nothing major. We just had GDP numbers for the US. Even though the numbers came in positive, we didn't really see a lot of impact from that. The market is still kind of riding on the positive sentiment from all the other central banks. So that's what's going on right now. In terms of our Asian session here, we saw numbers coming out of Tokyo here, out of Japan, and we have a bit of a mix. The CPI hasn't really gone up here. It's negative here, so that's not good. Unemployment rate is negative, so not that good for Japanese yen. It's already getting hit hard, and so the numbers that are coming in are not that positive. So the next set of numbers here are PMIs. PMI numbers are leading indicators. So if China starts to get negative numbers, that will have a negative impact on Aussie and New Zealand. So just keep that in mind. If the numbers come in positive, it will be better for Australia and New Zealand. So that's the correlation there. And of course, these days we're seeing, or we're hearing a lot of talk about Bitcoin and Ethereum. It's they're doing far better than Forex is these days. Okay, so in terms of data that's coming out into the month end here, let's take a quick peek. So just a note of caution here. We are heading into a long weekend, and as a result of that, we're likely to see thin liquidity in the market. So usually what happens, this is a big weekend, both like overall for US and Canada. As a result of that, a lot of people will kind of take extra long weekend. And as a result of that, even today we saw thin liquidity. And usually you can tell that it's thin liquidity when you see quick popish moves. Those are the results of thin liquidity. You see a price at one point and then all of a sudden it shoots up to a different point. That's because there aren't too many orders in between, so price will just shoot up or shoot down. So that's what we saw today as well, and I would say going into tomorrow, especially tomorrow, it being Friday and month end. So be mindful of the liquidity problems, and also because it's month end, people may be, there are two different scenarios that tend to play out into month end. One is that people will close their trades out, and second is when they are bullish on something, they will kind of hold on to those trades and it's just kind of stay in them, in which case price will move up quite rapidly. So watch out for that. It shouldn't affect the London session, but what happens generally is even in the London session, because the traders know that it's a major holiday in North America, as a result of that, they may lighten their positions or they may not be as aggressive with their positions. So this happens in both the cases, even when we know that there is, the London traders have a long weekend or there's a big holiday. Usually the other traders around the world will kind of adjust the positions, because usually the big hedge funds and big players like institutional traders have they do this follow the sun model. So they will have their locations in different places. So overall, the position size gets reduced. But the London session normally will be more active than the New York session going into a North American holiday. All right, so in terms of the news coming up here, we do have the current account number for the British pound, which is the trade balance number. So we are expecting a negative 17.2 billion. So this is an important number, so we'll have to keep an eye on that. GDP number for Canada. Canada has seen a lot of bullishness based on Bank of Canada comments around reducing monetary policy, the stimulus in the market, and also kind of tightening the monetary policy a bit and potentially raising rates. So they haven't kind of said that they're going to raise rates soon, but they're kind of starting to talk about it, as is Bank of England as well as ECB. So all of them, because of that, they have been very, very hawkish. So Canadian dollar has been very positive as a result of Bank of Canada comments. So if the GDP does not support the rate hike or the tightening of the monetary policy, that could have a negative impact on that. So this number will actually be important for Canadian dollar tomorrow. Other than that, we have some orange news. We have personal spending. We have Chicago PMI. Again, this is the leading indicator. We have consumer sentiment number, which is also important. So these numbers are important. And normally some of the numbers that generally are not as critical kind of can become a little bit exaggerated when we are in the low liquidity conditions. So normally what happens is if there's thin liquidity in the market, so not a lot of people are trading, we'll see that the news that normally doesn't have a lot of impact on the market will suddenly have a bigger impact. So just keep that in mind going into our trading tomorrow. All right, so let's move on to the charts here. We are looking at euro dollar chart, and we have to zoom out a bit here. Very, very bullish day today, and we closed into the highs of the day. See how close the close of the candle is, the close of the day is, and it's past our resistance level. So price has broken through here. So the next level that we need to watch out now. So we are very, very bullish on this one. Not much in terms of pullbacks, very, very small pullbacks, so highly bullish. We're looking for a 114.60 area, which is the top pin bar here. It could even go higher. So this is what can happen with low liquidity conditions. It can just push price up higher. So we're looking at 114.77. So that's this pin way back here. So keep that in mind. We are likely to see a bit of a pullback. It hasn't been, see, for the last, you can tell that there's a lot of bullishness in the market when you see that the pullbacks are not very big. So based on this one here, we did get a bit of a pullback back into this support and resistance right into here. It was a very, very nice pullback right into our previous support and resistance. But since then, we haven't seen much pullback. So the momentum is very much to the upside when the pullback is less than 25%. And that's what we are seeing right now. The pullback isn't that much. So if we draw our fibs here, you will notice, so here's our 23% pullback, 113.80 level. And so this is where we would expect our pullback to be. And then we're looking for a further move to the upside. So we are bullish on this one. So 1380 is where we're looking for pullback to come into, and then a move to the upside. So this is what it looks like here. We are into this support and resistance level. So the move would generally look something like this, and this is what we're looking for. So price to pull back into S1 and then another pop to the upside. Based on daily here, this is very bullish. So do keep in mind month end, so we could see some reversals, but this is a lot of bullish sentiment in the market right now. Pound here as well closed into the tops, very, very bullish. We are back into the area, into the levels that we started off with prior to the general elections being called. And this is the drop that we had seen, big inefficient move to the downside. We have filled that move, and now we are beyond that. So we are into this previous support and resistance at 130. 130.14 level, and now we're looking for another move to the upside. So 130.50 level is the next target, and beyond that we do need to move out a bit here. This is what we're looking for. So 31.20 will be the next level to the upside, which is this big important support and resistance level here. So 130.120 is the next target level to the upside. And if you take a look at the 4-hour, as we can see, we saw this inefficient move and it hasn't. So this drop here has been filled. So this inefficient move here has been filled. And now we're looking very, very bullish. There is no pullback here. So there was a pin bar, which did not work out. So we had a bullish close and then price kept on moving up. So very similar to the dollar, euro dollar today. So if we take a look at our 5-minute chart, so this is just for reference purposes here. So we had a double top here. See how price could not break below this internal support and resistance level, and this is exactly where it turned around. So this R1 level, price could not break below that, stayed above and then pushed on higher. So we have very similar scenario with British pound here as well. Price has been very, very bullish. So if you look at smaller time frame, see how it's closed into the high of the day. This is highly suggestive of another push to the upside. So in terms of pullback, this looks like a good level for it. So 129.80-ish level, the top of this pin, that's where I would look for a bit of a pullback here. So we're looking for a pullback and then another move to the upside, but very, very bullish overall. So last little while has been very bullish and the sentiment seems to be continuing. So based on the 1 hour here, as we can see, this is quite bullish. Looks like it may break to the upside here. So we had a bit of a pullback and then we have just been into that uptrend and the trend line has certainly been holding. So now if it breaks up higher, we're looking for it to move higher. So bullish on pound dollar. Dollar CAD here. Dollar CAD was interesting today. So we saw a big break below 130 here. Based on the inventory or 130. Let me go back to the 5-minute chart here. So this level here, a 130.20, we saw a big break below this based on the gas inventory. So normally Canadian dollar, Canada is an exporter of oil and gas. However, this was natural gas inventory. So generally they don't even make a blip on the market. But today, because there are thin liquidity conditions, as a result, we saw a move to the downside. So based on this close here, so see these pins here, a lot of rejection in this area. So this was an important support area and now we are breaking it and we are moving lower. So the first target here is 129.60 area. And if we pull back a bit, we are looking at 129.00. So that will be, those will be the targets to the downside, 129.60 first and then 129.00, which is into this previous support and resistance area. And we could go lower depending on how the market, how much it is driven by sentiment. And right now we have positive sentiment for everybody essentially against the US dollar. Plus the US dollar GDP forecast got reduced by IMF. So that was a hit on the US dollar as well. So as a result of that, everything is bullish against the US dollar, which means we are bearish on dollar CAD because it's in the opposite direction. So we're looking for it to drop 129.60 and then 129.00. So if we go back into our 4-hour, as we can see, price broke below this level and it continued lower. It closed into the low of the day, pulled back slightly, not even 23%. And when price does not retrace even to 23%, sorry, it means that price is not going to retrace. Price is going to continue forward. So now we are looking for a further move to the downside as a result. So this is what it looks like. It dropped, went sideways, and now it is dropping again. So we're looking for that to continue. Okay, Aussie dollar. Aussie has been very bullish. We did see price again. This is kind of like euro. It went up, pulled back right into our R1 level here, and back into the highs for the close of the day, and now it's pushing higher. So based on the daily close here, very, very bullish. Again, just like euro, we closed above the previous highs, and as a result, we are looking for another move to the upside. So the target here would be 77.20 level here. So this is where we are looking for price to go. And then further, we are back into the March highs of 77.50. So 77.20 and 77.50 will be the targets to the upside here. So as we can see, price broke through here, held above. So nice back test, and then price moved on further. And here we are. It's when generally you'll see when price closes into the high, we are going to see it go higher. So that's what we are seeing here. So very bullish on Aussie dollar. New Zealand dollar, very much the same story. It did pull back more than Aussie though. However, it did a double bottom here, and then since then it has been moving up higher. So based on the daily close here, this is bullish as well. Actually, based on the daily close, so this was the daily close. This is uh, it doesn't, it's a very, very neutral close. So we have pins on both sides, very, very tiny bodies, so spinning top close. And as a result, it's neutral. And because all the commodity currencies are bullish, New Zealand dollar is getting pulled with that. So in this case, the target would be 73.30 first, which is the top of this candle. And then if it breaks above these highs here, we're looking at 73.70 area. So that would be our target to the upside. So we are bullish on this. And if we go back a little bit, this has been more of a compressed move than anything else. And price has kind of consolidated into the highs. It hasn't really gone anywhere. But now we are seeing the bullishness as a result of everything else essentially being bullish. So New Zealand dollar is getting pulled up with the rest of the currencies. So we are certainly looking into 73.30 as the first target, which is also our R1. And then we're looking for further move to the upside in this one. But this is not as strong as some of the other ones. So if you were looking for, choosing which pairs to trade, this is probably not the best ones. Pound and euro or dollar CAD, those are better ones with a greater sentiment behind them. Yen has been very, very weak. So as a result of that, all the yen crosses have been going up. And this is what we see for pound here. So now we are starting to see a bit more of a pullback in the yen crosses. So this one here is still bullish, bullish close here, and we are looking for a further move to the upside, but this is where caution is warranted. So the next target here will be 14700. Now that's a lot of pips. So let's take a look. We are into 4 hour here. This looks quite bullish. It's holding above the previous support and resistance level here, as we can see right here as well as here. So this looks bullish at the moment. 1 hour chart, as we can see, it is holding above. So first target would be 146.50, and then we're looking at 147. So pound yen certainly looks bullish. Dollar yen here, deeper pullbacks in this one, very, very neutral close here. So it is still holding above the previous resistance level, which has turned into support here. So 111.80 is the support. It has been rejected a couple of times. Today, again, it got rejected. So we're looking for a further move to the upside. But this is the target here. The first one will be 112. Let's bring this closer. So 112.50 area, and then we're looking at 113. So definitely bullish on this one as well. Let's see if I can get precise on my daily here. Okay, I think I have to go lower. Okay, so this is where we are. We did see a drop here, but it is holding the highs. As we can see this previous highs, it's kind of holding above that, which gives it more of that bullish bias here as well. But again, dollar yen is probably not the best one to trade, because there's pound yen and euro yen that are much stronger than dollar yen. So overall, yen crosses are bullish at the moment, but this is probably not the best one because dollar is weak in itself. So pound yen, much better close for the day. So let's take a quick look at euro yen here. We did see a pullback just like we saw in the pound. And now we have kind of broken above the previous daily levels here. So this is where we are. So 128.80 is the first level, and then we are 129.70. So this is quite bullish here as well. It looks like it wants to move up higher. And in terms of pullback, since we are way up there, 127.80 looks like a decent level for a pullback. So if we look at from 1 hour perspective, 127.80, which is this previous resistance level, which we're likely to see act as support. So we're looking for a pullback into here and then a further move to the upside. So 127.80 area would be a good area to look for a potential long. Okay, so that's euro yen. Euro CAD here, sideways move. We did see a bullishness come into the, or we did see bullishness come into the market, but today was a very, very bullish day for Canadian dollar as well. So this is sideways. Again, probably not one of the best pairs to trade. So I would say this will be more range bound here with 148.96 or 149.00 as the high. And then we could probably, so we're looking for price to kind of move towards a midpoint here, middle of the range, which would be 147.80. So not the best pair here, but range bound. Euro Aussie, we are seeing price come down here just because euro hasn't moved up as much, but we saw the commodity currencies, they picked up some hawkishness or bullishness in them. As a result, we are seeing this come back down here. And in this case, so if the PMI numbers out of China are positive, then we are looking for price to move back lower into 148.13 level. So this support and resistance level right here. So in this case, very, very neutral close. So likely price will move into 148.13 level, and then we'll have to see how it reacts here because this is important support and resistance area. So neutral close for the day. And that, I think that's all. Anything else or anything else to add? Okay, perfect. So that's it for our call, and I will see you guys tomorrow.